Good evening, everyone. Welcome to this first webinar series that we're doing on the Union Budget 2021. I thought it's a good opportunity to decipher this budget, though the changes have been not too much, but still they are very relevant. And I thought let's look at what changes are there in more detail. And that's the reason we planned for a 5-day web series wherein we can deep dive into different topics a little more specifically and also see what issues are arising from them. Palak, will you start? Palak, are you there? Palak को mute करो ना. Palak को mute करो.
Good evening, everyone. Today, we all have joined to decipher the newly rolled out budget for the financial year 2021-22. So, this budget was presented in circumstances like never before. Impact of COVID-19 has been global. We could not have imagined that the global economy, already in throes of a slowdown, would be pushed into an unprecedented contraction again. The government took some major decisions amidst this, where the risk of not having a lockdown was far too high. The impact of having it has been considerably consequential. Now, when the lockdown is no longer imposed, we look forward to unlocking new opportunities or challenges that this budget has brought along. Acupro has served in overcoming such challenges for its valuable clients for over a decade now. We believe in understanding and analyzing things to the core. The ideals yesterday, today, and tomorrow will be same. So, it shall be a session of 45 minutes where we shall deep dive into unlocking budget 2021 together for 5 days. We shall be deciphering 2 topics each day concerning various tax aspects. All of you are requested to put forward any queries related to the topics in the chat box provided. The queries shall be taken up at the end of each session. Now, I request respected Alok sir, kindly take over from here.
Yeah, thank you, Palak. That's a good introduction. So as Palak mentioned, the idea is just to take 2 topics in a day and then see what are the issues there. Palak, if you can unshare, I'll share my screen. Yeah, just a minute. So budget 2021, as we all know, has not imposed any new taxes, has not imposed the feared COVID cess that everyone thought will be there. What it has done it has kind of tightened a few screws. It has again taken forward the pet project of the government of having a faceless interaction with the tax office. It has reduced timelines and it has plugged certain so-called loopholes that people were taking advantage of. So no new tax proposals as such. I mean, there have been some consequential tax proposals of granting incentives here and there or extending incentives by a year, but no substantive changes in the tax laws, and probably the tax rates have already been uh, lowered significantly over the last year and a half. So the government, it is understood that the government views that the tax rates are now stable and at a level where they should be. So no further tinkering of tax rates. So that's a welcome step. Uh, Now, as compared to, so today what we are trying to look at is two things. What are the changes that they have done in the tax audit scenario, and what is it that they have done on tax return filings? That's the topic one. And the second topic would be on faceless assessments, faceless appeals, faceless penalty proceedings, and some other changes that they have done in the context of dispute resolution. Uh, I We selected this topic purposefully because uh, we are all in the midst of faceless assessments which are happening as we speak, and faceless appeals have also started. So it's important to just understand what's the process over there, and where all we need to be more careful. So coming to the tax audit part, again, continuing with its cashless economy theme, the government has further enhanced the limit of tax audit and has said that if an SSE's or if a taxpayer's sales, turnover, gross receipts are less than 10 crores, then there is no tax audit which is required. But then there are two conditions, and these conditions came last year only. And there, the threshold for the turnover was 5 crore, which has been increased in this particular year to 10 crores. So they've doubled the threshold. And the conditions are that aggregate of all amounts received. Now, all amounts received is not turnover. So all amounts received could be on account of sales during the year, on account of realization of debtors, which were there as on 1st April, which could be on certain reimbursements, refund of advances, even loans. So if the all amounts received in cash are less than 5% of the total receipts during the year. Now this is significant. So this clause has got nothing to do with what my sales turnover is. So it talks about all amounts received in cash should be less than 5% of the total, less than or equal to 5% of total receipts. And there's another condition that all amounts paid, whether for purchase, whether for payment of prior year purchases or any other transactions, sales return, etc. If all amounts paid in cash are less than or equal to 5% of total payments made during the year, uh, uh, then only you are eligible for invoking this particular provision in section 44AB and take a position that no tax audit is required. Now, I mean, while cashless economy is good and the requirement, I mean, this is a move towards ease of doing business. There's certain things which I think the government has overlooked or probably has purposefully given a go by, and that's that a tax audit report actually came out with certain other things also. It came out with your 43B disallowances, it came out with your TDS compliances, it reported certain deductions that you would have taken, it reported capital expenditure, and all those things. Now, all those things will not be required to be reported because the tax audit per se is not applicable. So that's something which maybe the government is relying on other sources of information to track that. But that's, I think, that is where probably um, there will be uh, some adjustments which would need to be done in order to capture non-compliance of those issues. Uh, the other noteworthy thing is that this exemption is for small taxpayers carrying on business, and this exemption is not available to someone who's carrying on a profession. Now that's also a little inexplicable. Why is the profession being singled out? Because one would believe that a professional would be more compliant with the tax laws. But I mean, this is what the provision is as of now. So any professional having a gross receipts in excess of 50 lakhs is still required to get a tax audit done. Now, a consequence of this tax audit relaxation is that individuals, firms now will have to file their tax returns by July or yeah, by July 31st mostly, uh, because the tax audit is not required. So earlier where they would have filed their returns by 31st October, they will now be required to file their return by 31st July. And we all know that if there is a delay, there is a fee of 5,000 rupees, which is payable under 234F. So this is a change in the tax audit requirements, and this is applicable from FY 2021. So which means tax returns which are filed for this particular year, the SSEs will have to be careful that if they do not qualify for a tax audit, then they file their tax returns well within the due dates, which is mostly 31st of July. Uh, then what they've done is they've changed certain timelines for uh, revision of returns as well as filing of belated returns. Uh, they have mentioned that, and this is again for FY 2021, which means returns filed for AY 21-22 will come under this. So they've kept if you look at the memorandum, they've kept the date as 3 months before the end of the assessment year. So which means by 31st December, you'll have to necessarily file either belatedly or you'll have to necessarily revise the return by that time. So so essentially the time available for filing a revised return, if you originally your due date is 31st July, then you have to necessarily revise it by 5th by within 5 months. Similarly, if your due date is October 31, you have to revise within 2 months. And if you are a TP, if you have a transfer pricing transaction, then you have to revise it within 1 month. Now, this is a little steep to my mind because a lot of times you identify errors a little later. I mean, so pretty much government is saying that if you're filing, you might as well file absolutely error-free returns. So they haven't given you much time to revise or to identify errors. Uh, but if you look at the language that they've or the change that they've made in section 139.4 and section 139.5, it appears the language they have used is within 3 months from the end of the assessment year. That's the language they have used in the section in which the amendment has been made. Now, that within 3 months is a very confusing language, and it gives you an impression that you can only revise or file a belated return between January to March of that relevant assessment year. But I guess that's a drafting error, and probably they'll rectify this or modify this when the Finance Act is eventually passed. Uh, then one small change that they've done for resident individuals above 75 years. And they've mentioned that if the individual has only pension income and interest income, and that income is in a specified bank account, then that individual will not be required to file his or her return of income. The banker will do the appropriate TDS, which means the banker dons the role of an employer, as today the employer does. And he will take all necessary saving uh, documents or ATC documents and all that to essentially calculate what his final tax liability is and then do an appropriate TDS. So this is on the uh, filing of revised returns and belated returns. Now, consequentially, with the reduction in timelines for filing of returns and revision of returns, the timelines for issuance of notice and intimation has also been reduced by 3 months. So there the reduction was 3 months from March to December. Here again, they've reduced by 3 months. So earlier you could get a notice under section 143.1 or intimation under section 143.1a within 12 months from the end of the assessment year. Now you will get it within 9 months. Uh, Similarly, your notice under section 143.2, which is a notice to undertake a formal scrutiny assessment, that that could come within 31st September. 30th September. I think the date's misspelled there. 30th September. Now that can come by 30th June. So even just a 3 month period in the following assessment year. But if you look at it, your returns and all have to be filed by December necessarily, which means the department still has 6 months time. Earlier, the returns could have been filed by March, and then there was a 6 month time. Now also the same thing happens. You file your returns, you're done with your return filing by 31st December. The department has 6 months time to issue a notice for conducting a scrutiny assessment. And similarly, the time period for passing the order is again reduced by 3 months. But if you look at it, they still have full uh, uh, full period to do an assessment because there is a consequential reduction in filing of time period allowed for filing of returns also. So this is like accelerating the entire process. Uh, it appears good, but let's see how it pans out and how things uh, go on this, because we've seen umpteen cases of I mean, in the last 4 5 years, every time there has been a huge demand uh, for extending the due dates, and when that happens, how will all this get extended? That needs to be seen. So till date, we have seen that due dates have been extended, but generally, the time frame for issuing notices or intimations or orders had not been extended, except for this COVID period. But now, with so steep timelines, it remains to be seen that if due dates are extended, then how do these timelines also get extended? Uh, Now, this is another significant change that they've done. We've all seen how income escaping assessments were being handled. And there was this significant expression, reason to believe, on which there have been plethora of High Court and Supreme Court decisions. What is reason to believe? And that issue was more or less settled, though there was a lot of litigation around it. So change of opinion and reason to believe and all that. Uh, Now that has been given a go by. So what has now been mentioned is that if the assessing officer is in possession of information that suggests that income chargeable to tax has escaped assessment, uh, then he can initiate reassessment proceedings. So the discretion of the assessing officer in form of a reason to believe has been taken away. He should have information that suggests that income chargeable to tax has escaped assessment. Now, that's an interesting use of the word suggests. I'm sure there will be a lot of litigation around it as to what suggests and what doesn't suggest. So there could be, I mean, this could be inclined in the realm of suspicion. So whether suggests would mean if he suspects, or what does that mean? So again, the courts will have some interpretation to do on that. But they have what they've done is they've tried to define what information that suggests that income chargeable to tax has escaped means. And essentially, they've categorized into two parts: information flagged by a risk management strategy, and final objections raised by the CAG, or the Comptroller Auditor General. So these are the two definitions which are given to information that suggests that income chargeable to tax has escaped assessment. In addition, they have said that if there is any information which is gathered in a search or survey, that information would be deemed to be such information which suggests that income chargeable to tax has escaped assessment. Or if there is money, bullion, jewelry which is found during search process of the taxpayer, or during search of any other person, that is again, that will be deemed as information that suggests income chargeable to tax has escaped assessment. Now, interestingly, they have introduced section 148A here, which is nothing but that's taken a cue from the Supreme Court decision in the case of GK and Driveshaft. So, in that decision, the Supreme Court had said that the proper way to conduct a proceeding under section 147 stroke 148 is that the SSE should file a tax return, and then the SSE should be furnished reasons for initiating the proceedings under section 147 stroke 148. So now they've inserted 148A, and they've said that before initiation of proceedings or reassessment proceedings, the officer has to issue a notice as to why the notice under section 148 should not be issued. And once the SSE gives his reply, then the officer must pass an order under section, must pass an order that whether 148 can be issued or cannot be issued. So this is like a uh, pre-assessment as to, or a predetermination whether a 148 is warranted or not. I think this is a welcome step. And there are approvals which are there, which the assisting officer has to seek from his higher officers before doing any inquiry or before issuing any notice or a show cause under 148A. So that all is there. Now, significant change that they've done is time limits. So earlier there was this 4 years, which has been now reduced to 3 years, and there was this 6 years category which has now been increased to 10 years. Now, what they have said is that income escaped is equal to or exceeds 50 lakhs, and it is represented by an asset. So that again is a subject of interpretation. It should be represented by an asset. So for instance, if you say someone has earned 50 lakhs in a particular year, or 60 lakhs in a particular year, and that income did not suffer taxation, and that person has spent that amount, say for a marriage or for throwing a party or something, then where is that asset? So are we saying that that person will not be assessed under this new provision? So this still needs to be looked at. Uh, and then again, they've said that 148A procedure, which is a predetermination, will not be followed in case there is a search or money has been seized or money, bullion, etc. has been seized. So there 148 proceedings are pretty much automatic. Uh, so this completes our first topic. I'll be happy to take questions on this if there are anyone before any if there are any, and before I move to the next topic. Uh, Palak,
Yes, sir.
uh, have you seen any questions on the chat box? I can't see them. So
Not yet, sir.
okay. So I'll move to the next topic, uh, which is again, which is, as I mentioned, very relevant in the present month, because all the assessments are on, and most of the orders are expected either in this month or in the following month. Uh, so there was this Taxation and Other Laws Relaxation and Amendment of Certain Provisions Act 2020, which was done on 29th September. And there the intention of the government came that uh, on reassessment proceedings, on revision proceedings, on TP proceedings, on appeal effects, everything. I mean, their attempt would be to go into a faceless proceeding. And in line with that attempt, they have notified schemes for faceless assessment. They have notified scheme for faceless penalty proceedings, faceless appellate proceedings at the first level. And in this current budget, they've also mentioned that they want to do even appellate tribunal proceedings in a faceless manner. Uh, but that's generated some hue and cry. Uh, we'll see how this faceless assessment or the faceless proceedings uh, are notified, so that we understand what is it that the government wants on this. So presently, faceless is limited to faceless assessment, faceless appeal at the first level, faceless penalty proceedings, and now they are rolling out to faceless appellate proceedings. Now, what is not still not a faceless proceeding is transfer pricing proceedings, DRP proceedings or dispute resolution panel proceedings. Uh, Even I think TDS proceedings are also not faceless as of now. It appears that way because they haven't mentioned about 201 anywhere. Uh, and I think rectification proceedings under the income tax under for order under 143.3, that also has not been specifically mentioned. So earlier the intention was that rectification proceedings under 143.3 will be handled by the jurisdictional assessing officer. But now that we see in the appellate proceedings or the first level appellate proceedings, there is a provision for rectification proceedings of CIT appeal orders within the scheme. So this is still evolving. So let's see how we move forward in this. And one of the most significant aspects of this is how do you ensure that justice is being done? Uh, are the principles of natural justice still intact, or is there a significant challenge to them? We have seen a number of writ petitions which have been filed before the various high courts in respect of these faceless proceedings, because the plea of the SSC is that if you don't hear me, uh, and if you don't give me a chance of representation in a physical manner or uh, in a physical manner, then you're taking away a valuable right that I have in any such proceedings. And to that extent, the orders which will be passed will be not in accordance with the principles of natural justice. Uh, so I understand there are several representations which are going from the bar counts, from the ITAT bar and several other bodies, uh, that this process may not be in line with the requirements of a well-established rule of law, that any order which you pass against the person, that should adhere to principles of natural justice. Uh, so let's see how that evolves, and I think once the court gives a direction on that, I think things will be more clear. But as of now, the way the schemes are, uh, in an assessment proceedings, there is a national faceless assessment center, which will act as a nodal agency and a single point of contact between the taxpayer and the revenue. And the assessment proceedings are to be carried by regional faceless assessment centers. And within the regional faceless assessment centers, there will be various units, which will be assessment units, verification unit, technical unit, and a review unit. So 4 units will be or have been constituted under the regional faceless assessment centers. All written submissions have to be done in electronic mode, and this scheme was notified on 13th August, and said that all assessment orders, even for ongoing assessment, shall be passed by the National Faceless Assessment Center, except assessment orders in cases which are assigned to central charges, for example, serious frauds, major tax evasion, and all that, and assessment orders assigned to international tax charges, which means transfer pricing, and that in case of non-resident SSCs. So all orders will now be passed by National Faceless Assessment Center. Uh, Though there is no stipulation to this effect that any orders not conforming with the scheme will be non-est, but I would believe that if the government has rolled out a scheme, and if the authorities do not adhere to the provisions of the scheme, then any order which is not in adherence with the scheme should be treated as non-est. But that again needs to be tested. For instance, we've seen a case where there has been an assessment order which has been passed, and before passing the assessment order, a draft assessment order was not furnished to the SSC. And in the final assessment order, they have made variations or adjustments to the returned income. So it needs to be seen whether that assessment order per se is valid or not. And as I mentioned, the intention of the government is to make all proceedings faceless. And it is with this intention that they have mentioned that DRP proceedings would also become faceless, though no scheme has been notified till date. And this is what the government says, that what are the benefits of faceless assessment: transparency and efficiency, uh, improvement in quality of assessment, functional specialization, ease of compliance of taxpayers, no human interface, and expeditious disposal of cases. Uh, so this is what the government perceives are the benefits. This is just a chart as to how what's the organizational structure when it comes to faceless assessment. I'm not going too much into it. It's just you have a national faceless assessment center and then a regional faceless assessment center. So as a process, what happens? as a process, the National uh, Faceless Assessment Center issues a notice. The SSC has to submit a response within 15 days or such extended time as the authorities would permit. Then the National Assessment Center will assigns this case to a regional assessment center, and once the regional assessment center gives it to you, an assessment gives the case to an assessment unit under it, then that assessment unit uh, asks the National Assessment Center to connect with the SSC or with the verification unit or technical unit. So the assessment unit uh, will connect with the National Assessment Center for three parts. One for verifying certain information, for which it will forward the case to a verification unit. One for obtaining some technical inputs, for example, on a legal issue, they will forward their query to the technical unit. And the third for obtaining further information from the SSC. And once all the three are submitted to the NAC, to the National Assessment Center, then those are then forwarded to the assessment unit by the National Assessment Center. Uh, Once that happens, then the assessment unit, just a minute, prepares a draft assessment order and then it sends it to the National Assessment Center. The National Assessment Center can either send it to the review unit uh, or it can send a draft assessment order to the SSC for his objections with a show cause notice as to why such draft assessment order be not passed as a final assessment order. Or the National Assessment Center can also finalize that assessment order after verifying that uh, the the verifying whether the risk parameters which it had identified have been taken into account, and if the order is in line with the automated tool that the government has, uh, and then send it to the SSC. There is a quite a circuitous procedure which has been laid down, that in case there are modifications, the National Assessment Center can send it to the review unit, and then the review unit can suggest further modifications. If the review unit suggests further modifications, then uh, those modifications can be sent to another assessment unit, and then a draft assessment order is again prepared. So I mean, this process can go on for circles, but it remains to be seen how they are actually handling this. In practical scenario, I've seen clients getting a draft assessment order with the same uh, assessment order as of the earlier year. This it's I mean, the order is a replica of the order of the earlier year, proposing to make same adjustments, even to that extent that even figures from the earlier year have been copy pasted. Uh, so that's how, in practice, we are seeing that this is what is happening. So I don't know what's the role of a review unit here, whether the review unit has even looked at it. So these are some practical challenges. And as I mentioned, there is one case where the draft assessment order was not passed at all, and simply a final assessment order was given to the SSC. Uh, Now, there is a provision that on request of SSC, he may be provided an opportunity of personal hearing via a video conference or video telephone. Now, when there was an e-assessment scheme, this was an automatic thing that in case there is a modification, then he will be provided an opportunity of personal hearing, so video conference or video telephony. But in the revised faceless assessment scheme, they have said that if the SSC requests, then the chief commissioner will evaluate whether to grant that request or not. So the discretion has been given to the chief commissioner. There's also an amendment or in the scheme to the to suggest that uh, conditions would be prescribed or circumstances would be prescribed under which the personal hearing will be given. So those circumstances will have to be adhered with by the commissioner or the chief commissioner while taking a decision as to give a personal hearing or not. Now, the other thing which is still unclear is they mentioned video conference or video telephony. Uh, so, I mean, personally, we haven't had a chance to see how this process runs. In the sense, there have been several requests for a personal hearing, but I haven't come across an instance where a personal hearing has been granted, and how did the proceedings go in that hearing. Uh, so from some quarters, it is being told that uh, per video conference, while the tax officers can see the SSE or his legal or his representative, authorized representative, but the authorized representative and the SSE cannot see the tax officer. So I wonder how it's a video conference or a video telephony. But that is, as I mentioned, that's still not very clear on this. Uh, and once that happens, then the assessment is finalized, and the final assessment order is sent to the SSC, and all electronic records and all electronic documents which were uploaded during the process of assessment are sent to the jurisdictional assessing officer. So jurisdictional assessing officer then has to ensure that he enforces the demand or does whatever that needs to be done on that order. So this is about the faceless assessment proceedings. Uh, Now, then there is an appeal against. There can be an appeal against the assessment, uh, and that appeal would lie with the Commissioner of Income Tax Appeals. Uh, so the faceless assessment appeal proceedings have been notified on 23rd September 2020. Here again, the structure is similar. They have notified a National Faceless Assessment Appeal Center, Regional Faceless Appeal Centers, and then there are appeal units. So there are no technical units or a review unit as such, but there are appeal units. And the appeal unit will have one or more commissioner appeals, and then the ministerial staff uh, as the commissioner appeals may require. The process is similar. Appellant files appeal in Form 35. Form 35 is already electronic, so you have to e-file the uh, form, e-file the appeals. It goes to the National Faceless Appeal Center, then gets assigned to the appeal unit. Appeal unit may admit or reject the appeal with condonation of delay. Then the appeal unit will ask the National Faceless appeal center to connect with the appellant and to the relevant AO. Appellant files submissions or may take up additional grounds of evidence, file additional evidence. If there are, if the appeal unit feels that a remand report is required from an assessing officer, then the appeal unit calls for that. Uh, And all that is then received by National Faceless Appeal Center, and then that is submitted to the appeal unit. And on the basis of the submissions that the appeal unit receives, it prepares a draft order and sends it to the, again, National Faceless Appellate Center. Again, a similar process of that if there is a draft order, then that draft order could be sent to another appeal unit. This is, I think, a process to make sure that there is no bias and there are two appeal units which look at it. And if the new appeal unit suggests any modification, then the process again is repeated. If there is an enhancement proposed, then there is a show cause notice issued to the appellant. And then there could be a request for personal hearing. And after that, the appellate order gets finalized and then served to the appellant. So this is what the process is. And again, the same issue is whether a personal hearing, how does a personal hearing actually take place? So that issue still needs more clarity. Uh, so in the appellate proceedings, I'd mentioned there is a process for rectification of an appellate order. So that process again is there is a draft order and all that. So I'm not going into the specifics of that. And once the appellate order is done, then that appeal will lie with the appellate tribunal. So this is about the faceless appeal proceedings before the CIT appeals. Similar scheme has been notified for faceless penalty proceedings, and this is notified in January 2021. So all penalty proceedings will now be in a faceless manner. So if we look at it, it's a similar process as an assessment proceedings. So I'm not going deep into it. Same requirement of show cause notice and all that. And there is a technical unit, there is a verification unit here also. It's similar to an faceless assessment proceeding. And here also you have a video conference or a personal hearing requirement or provision that one can request for that. But as I mentioned, that request is to the discretion of the Chief Commissioner. So some common provisions for all these faceless proceedings, all communications to be made electronically and all should be authenticated by affixing a digital signature. Now this is very significant. They contemplate that all electronic records that you upload should be by way of affixing a digital signature. I think in practice, we have seen that a lot of these documents are not digitally signed, but scanned copy is uploaded. So probably one needs to take care of that. This is on the personal hearing. As I mentioned, the Chief Commissioner or Director General in respective charge may approve the request of personal hearing. So there is this case of Lakshya Buddhiraj, which has been filed on whether this is valid from the point of view that whether principles of natural justice get complied with when you ask for a, or when there is a discretion with the Chief Commissioner whether or not to give you a personal hearing. Certain other things which have been done in this budget in order to reduce the dispute. Not sure how effective these would be, but nevertheless, these have been done in the budget. Again, it's all stemming from the fact that the government wants to move to a faceless mechanism and wants to reduce the litigation, uh, wants to reduce the interaction of the taxpayer with the tax authorities. So for small taxpayers, they have introduced the Dispute Resolution Committee. Uh, so taxpayers with an income of less than 50 lakhs or less in a year in the tax return and aggregate variation of 10 lakh or less. So they can opt to go to this dispute resolution committee instead of CIT appeals. Uh, there's still certain eligibility criteria which have to be pronounced, which are still not there. But these are the basic eligibility criteria: less than 50 lakhs or less returned income and aggregate variation of rupees 10 lakh or less. They have said that SSCs where search was carried out or a survey was carried out, or who have an issue concerning tax treaties, they will not be eligible. Or SSCs who have had any detention, prosecution, conviction under very specified laws, they'll not be eligible under this scheme. And interestingly, they've said that the Dispute Resolution Committee will have powers to reduce, waive penalty, or grant immunity from prosecution. Now, what is not clear is what happens if a Dispute Resolution Committee says, okay, this is to be done, or it confirms a variation, or if it deletes the variation. So there is no mention as to what happens. Is the SSC entitled to file an appeal? Is the department entitled to file an appeal? I would think that dispute resolution committee should be more in the lines of dispute resolution panel that we have for handling TP matters or international tax matters. But that aspect is still not there. And I would believe that probably once they uh, roll out rules in this context, this will be more clear. So it is also not clear whether a dispute resolution committee steps in on the basis of a draft assessment order or they step in after a final assessment order is passed. So these are things which are unanswered as of now. Uh, Now, this is significant. They have sought to discontinue the authority for advanced rulings and instead replace it with a board for advanced rulings. And the rationale which has been given is that to ensure faster disposal of cases. Uh, And so earlier there was a 3-member bench of an advanced ruling, comprising of the chairman and one who used to be a Supreme Court judge, a retired Supreme Court judge, or a retired High Court Chief Justice. Uh, and there were 3 benches in India, but now they have sought to disband that, saying that they are unable to find people for the chairman and vice chairman posts. And that's the reason there are delays in pronouncing orders of AAR. So now they've said that we will have uh, a board of advanced rulings, which will have 2 members instead of 3, and each being an officer not below the rank of chief commissioner. Now, this is significant. Earlier, there was a retired Supreme Court judge, uh, but now you have an officer from the department. So it remains to be seen how these orders would come, especially if these are officers from within the department. One gets a feeling that there will always be a bias towards the tax department. So the whole purpose per se is getting a little muddled or lost. The other significant change that they've done is they've said that these orders are not binding. So these rulings from the BAR or the Board of Advanced Rulings will not be binding, as was the case with the AR, where the rulings were binding. One could still have gone and challenged by way of a writ petition. But now they're saying these rulings are not binding, and you can definitely go and file an appeal before the High Court within 60 days, and if High Court permits, within 90 days. So this is again a issue which one will have to look at. So I don't know how enthusiastic SSCs would be to approach the BAR, because one, looking at the constitution of the BAR, and second, that all these appeals are all these order rulings are appealable even by the tax officers. So there is no certainty which gets which one achieves by filing this BAR. So I'm sure representations will happen on this, and one would hope that changes are made to this, because the whole objective of an advanced ruling authority is getting lost in these kind of changes. Uh, so this again is proposed to come into effect from 1st April 2021. Uh, so as I mentioned, all these faceless and dispute resolution committee, board for advanced rulings, the government's justification is that it promotes faceless interaction, and it is to achieve greater efficiency, transparency, and accountability, and to optimize utilization of resources, and introducing dynamic jurisdiction. So I was hearing a government official the other day, and he mentioned that there could be instances where Officer A in City 1 has less cases and Officer B in City 2 has more cases. So by way of this, by way of having dynamic jurisdiction, they can balance the workload and thereby achieve greater efficiency. That's the justification that they're trying to come out with. But having said that, there are significant issues that one needs to look at, uh, especially making tribunal, which is the last fact-finding authority, as a faceless authority. I mean, doesn't look quite promising to my mind. And I would hope that the government understands the issues. In fact, I mean, to the contrary, it may only delay the process, because there would be so many cases where uh, hearings would be over in just 10-15 minutes, and the members would understand, and without having to go through voluminous paper books, they would pass an order or they would pronounce an order then and there. Uh, that all will not happen now, because the members would be expected to go through those voluminous paper books and read through all the lengthy written submissions and all that. And to imagine members going through 2000 pages paper book and then finding out what's written where, I mean, it looks a little awkward. Uh, so, so let's hope that there are appropriate changes which are done in this. So with that, I conclude these two topics that we've chosen for the day. I'll be happy to, if you can put it on the chat box, if you can ask a question, or even we will unmute. Palak, can you unmute everyone in case anyone wants to ask something, or if there is a question on the chat box.
I'll just do that.
Yeah.
Good evening, Alokji.
Yeah, good evening.
Uh, as you have rightly mentioned that we are seeing that in the current budget proposal, they are going to make the ITAT also faceless.
Right.
Yeah, we know that ITAT is last finding authority, so it is
Right.
little awkward to make it faceless, because if any fact has been recorded wrong by any reason due to these hurdles, basically face-to-face interaction at any level like AO or appeal level or appellate level, where SSC will with the SSC there will be nothing left for to fight the case further actually. So in my view, or just let me know that there should be some parallel authority. At least facts can be recorded correctly. If any order, if the any fact had been recorded wrongly, or in that sense in which the submission has been made. I mean, the fact has not been recorded in that sense in which submission was made by the SSC. So there should be some authority. At least we can rectify these facts in the order itself, so that there can be ground to fight the case further. Is there, is there any authority which I am missing, or
So, Brajesh, I mean, I think that's a very valid question. And this is what the fears are, that the tribunal is the last fact-finding authority. So unfortunately, there is no other authority which will go and verify your facts. So unlike in an assessment proceedings where you have a verification unit or a technical unit, here in a faceless appellate proceedings, it is unlikely there will be any verification unit, because you don't have a verification unit for CIT appeals also.
Mhm.
Right? So I would think that there won't be any such authority, but I know for certain that there are huge representations which are going from across the country.
Yes, yes,
That this is something which is absolutely not desirable. You're actually uh, killing an institution
correct.
which was there. Yes, there could be some apprehensions about the functioning, but this is not the way to completely uh, give that institution a complete go by. I mean, one would. So apart from these aspects, there were several other benefits which a tribunal gave to people. I mean, your budding chartered accountants, your budding lawyers learned the trick of trade here and then moved up to the higher courts, right? All that will be
Yes,
lost. And the second, the proceedings before the tribunal were all public proceedings, in the sense that they were done in an open court, right? And
yes, yes,
they talk about transparency. Now
correct,
here there is no open court. Even if they give you
correct,
a personal hearing,
correct.
it's between the SSC and members.
Because it's a quasi-judicial authority, ITAT last. Because before
Right.
High Court or Supreme Court, you can actually your body language, way of speaking, the presentation, all these matters actually
Yeah,
can
absolutely.
be presented on a piece of paper.
Right. Right. So, I mean, I think these issues probably have not been thought through.
Yeah, yeah,
Uh, so I just hope that they kind of keep it pending till March 23, and then
yeah,
this whole provision will lapse.
correct, correct.
Uh,
Mm-hmm.
I think this will rather increase the litigation cases even at the higher level the levels which are after the tribunal, the High Court and the Supreme Court, because if assessees are not getting any relief at the tribunal level, which they are expecting as a quasi-judicial last authority, right? So I think the litigation will more at the High Court level and the Supreme Court level by taking this practice.
Yeah, so every SSC's plea would be that I wasn't given a chance to personally explain.
Yeah.
I wasn't given a personal hearing.
Yeah.
And that plea per se will be good enough for a higher court or a High Court or Supreme Court to remand the case back.
Right. Again, it will go in circles, because they will go to High Court and again it will be remanded back to tribunal again.
Right.
So more delays will be there.
Absolutely. So it's not probably it will not achieve the purpose for which they have brought this in.
True.
But as I mentioned, the government has been hell-bent on making everything faceless. So one just shudders to think, will the high courts be the next victim of this? Yes, I mean, so I'm sure there are, I mean, and I'm aware that huge number of representations are going on.
Definitely.
Similarly, they have also disbanded the settlement commission. I've not covered it here because I thought it's relevant to a very few quarters. But this is what the government is now moving ahead with. But definitely making ITAT faceless is not desirable at all.
Yeah.
At least it should settle the first all these like faceless appeal, faceless assessment. At least it should be settled first. Then after, what is the result of that?
Right.
So government should think about the ITAT to make it faceless actually.
They should ideally have seen what's the experience in a CIT.
Yeah, experience. Yeah.
Right?
First, they should have taken the experience at least for a year, 1 year, and then replicate it to the ITAT.
Right.
The necessary modification and all that.
Yeah.
Right. But that's how speed is what is the mantra of this government. They just want to roll out everything in one go. But let's see this. There are people who understand this issue and then take a more informed decision before implementing this. Anything else? So kind of exceeded my time limit. I thought it would be a 45-minute session, but I mean, it's good that we could do this today. It was a starting. I also was getting a little more comfortable with this way of speaking to everyone. Difficult to do it on a faceless basis. So I faced this issue. I can't see whether you're getting it or you're not getting it, or is there an issue with my presentation or what. But let's hope that this improves further.
It is really good, really good.
Yeah. So tomorrow we have an interesting discussion on equalization levy and what does liable to tax mean. The change in that. I think there should be more discussion on that.
All right.
Right. So I look forward to all of you being there, and let's use this forum also to voice concerns on issues that will come out the same way that we've done today, so that those things can be collated in a representation. And then that representation can go to the ministry. And we hope that something out of that comes out and changes are made. Right?
Yeah.
So thank you very much, everyone, for participating in this.
Thank you.
And we look forward to having you all again tomorrow. Thanks a lot.
Thank you.
Thank you.
Thank you.
See you, Heather.